Okay, continuing with our commodity pinch theme, we now have on board Mr. Nihar Chheda, Associate VP Corporate Strategy at Prince Pipes, joining in the show. Mr. Chheda, good morning. Good to have you on the show. The prices of PVC resin, which is 80% of your costs, have actually surged very sharply owing to the massive shortage. What is it that you witness on ground, and how is it that your costs have gotten burdened?
So PVC tends to be around 65 to 70% of our cost structure. And there has been a significant rise in the PVC costs per unit over the past 3 or 4 months. And this has been due to severe global shortages in terms of supply, which is why there has been such a sharp sort of unprecedented hike in the PVC prices. And in terms of impact on the industry, what this is, a significant market consolidation that's happening in the piping industry. And now with this sort of supply shortages, the market consolidation is only going to accelerate from here on because the smaller players, the unorganized players, even some of the smaller organized players are facing major shortages in terms of their raw material security, which means there's major market share up for grabs for bigger players like Prince.
Sure. So what are the reasons for the shortage in PWC resin, and what are your suppliers telling you right now? When is it that you would actually see things normalize?
Yes, see, there are multiple reasons for this, sharp increase and major shortage. I think one is there are sort of major logistics and freight issues as far as vessel space is concerned, from some of the countries globally. And also there was, a few hurricanes out west, which impacted, the production of players, who manufacture PVC resin in North America and Europe, as a result of which they had to declare, force majeure, etc. So there has been major disruption in terms of global supply of PVC due to, largely this force majeure, and secondly, the lack of availability for vessel space.
Right. Mr. Chheda, what is expected in terms of profitability because of the kind of rise in commodity prices that one has seen? And is it going to impact your profitability as well as margins of the company in the near term, or do you think these market share gains are going to help you ride this cost surge?
So the impact of this price increase, largely is in terms of market share gains. In terms of profitability, we did see a significant amount of inventory gains in the second quarter. And I think that should continue to a lesser extent in the current quarter. And then eventually, inventory loss as well, because these kind of prices are not sustainable. But over an annualized basis, the inventory loss and gains, should even out.
So what is your pricing like currently, and is there a direct pass-through?
Correct. So there is it's a disciplined approach in terms of pass-through, whether it's an increase or a decrease. There is a pass-through that happens to our channel partners across the country. At such unprecedented highs, we don't immediately pass on the prices. It's with a lag, but it's with, largely with full effect, which is why, it's a pretty disciplined approach in terms of passing through of price.
So given all of this then, on an average, what will be your EBITDA margin range as you see it in the second half?
So see, in the first half, we had an EBITDA margin of around 14%. We feel like, 12 to 14% is a fair guidance. It's very hard to give guidances given the uncertainty in the macros, but 12 to 14% is what we've usually performed, in the recent past.
So, with the expected consolidation in the market and the increased demand that we've also seen for affordable housing, how is the demand shaping up for the company, especially in tier 2, tier 3 towns where the recovery has been a lot faster?
Sure. If you look at our quarter 2 numbers, we actually posted a 7% growth in value and were one of the fastest growing companies in the industry. And the reason for that is our robust distribution network across semi-urban and rural India. And Prince's ability to win in many Indias really helped us become one of the fastest growing companies in the previous quarter. And in the current quarter, what has happened is that urban India also has started to pick up. We are seeing good traction in urban metros like Bombay, Delhi, Bangalore, Pune, etc. So I think demand trend, in the coming quarters is moving in the right direction. And with the tailwinds of a consolidated market, I think we're in a good position to make significant market share gains.
Agri, plumbing, SWR pipes all contribute about 30 to 35% to overall revenues. So given strong recovery that we're seeing in the agri space, what's the growth expected from this segment?
So see, our 65% of our business is building material, which is plumbing and sewage, and 35% is agri. When I say semi-urban and rural India, it's not only agri, but it's also the building materials products like plumbing and drainage would have seen a good traction in the past quarter, and I think that trend continues. The good part is that in the second quarter we were able to post a 7% growth without urban India really doing that well. In the current quarter, what has happened is semi-urban and rural India continue to sustain their performance, and urban India has started performing well, which puts us in a good space for the building materials bio, which is a large chunk of our entire business and which is the more sort of value-added product for us as well.
You've recently also been into the plastic tank space. What's the rationale there, the kind of growth you're looking for or expect from the segment? Any new products in the pipeline?
Sure. The tanks industry is around a 4,000 to 5,000 crore market in terms of market size. The rationale for us entering into this product is that the distribution network is the same. The same channel partners, retailers, plumbers who buy our Prince pipes and fittings will now also start buying our tanks. So it's a very natural extension to our overall product portfolio, which will only help us further improve our range in terms of our product portfolio. And I think in the next 4 to 6 quarters, we are looking at newer products within the piping space to try and cater to newer applications and more sort of value-added, profitable niche segments is where our focus will be on new product launches within the piping space.
What's the kind of growth that you're projecting for the next couple of years now? What could be the potential challenges as well to really seeing that upward graph from here on?
See, there are always going to be challenges like there would be in any business or in any industry. But I think there are fairly good tailwinds for the industry. One, the market consolidation that we've discussed at length gives us an opportunity not only to grab market share, but also to improve our pricing power, which can be a great lever for margin expansion for us. So I think with the tailwinds of market consolidation and this structural and more sustainable sort of demand that we are seeing in urban India, I think that's here to stay, and that would really help us clock very robust value growth year on year, at least in the medium to long term.